All right, guys. Good morning, everyone. Stocks and coffee. You guys know the drill. While I'm getting set up here, give me a shout out. Let's see if you're drinking some coffee. Let's see what you're drinking, and of course, I like to know where you guys are from. All right, what's going on, everyone? A lot to talk about today, but it should go pretty quick because you can see here narrowed strategy. So once we talk about that narrowed strategy and the stocks we're focusing on, we don't have to dig too much deeper. But interesting market. This was a week that really, I think, turned things around for our analysis of the market, and it's actually playing out a lot like we've predicted through this event here, which is nice. We've been through a few of these. We know how they go. Let's see who's in here. You got a good turnout. We got Daniel. Good morning. Tim, as usual, what's going on? Happy Saturday. Jason from DC. We have Steve drinking Bic coffee. I've never had that in Kansas City. Donald from Connecticut. We got Richard. What's going on from Chicago? We've got Alexander from San Antonio. Tim, another one from the Chicago area. Then we have Ken here. I don't know how to pronounce that. Coeur d'Alene. Is that your coffee? Or is that a city? I don't know. I've never heard of that before. Rahul, what's going on? Green tea. We've got Daniel drinking some Cafe Bustelo. I always see that on the shelf. I've never tried it. I think that's instant, right? Looks good though. Hawa drinking his tea. Steve, what's going on? Black coffee. Then we've got Viraj from Alabama drinking Nestle. We've got Caesar, what's going on? Ken, what's going on? Selva. All right. Hawa from New York City. All right, good. All right, so good turnout this morning. We've got a lot to talk about. Some of you guys who are in the report know a lot of this stuff already. But let's start with the market as we usually do, and then hit the industries and stocks that we're interested in. First of all, the last time we met for stocks and coffee, those of you who obviously have been in the swing class or are swing members or have just emailed me, we've talked since then, of course, and a lot has happened. But last time we met was April 5th. So the beginning of this month for stocks and coffee. That was the first Saturday of the month. This is where the market was right here. We've already been in kind of a downturn. Then we had the huge gap down on this Friday. There was some fear going into the weekend, and a lot of doomsday sayers were out there, of course, as there always is when this is happening. And we started off. I have our outline here from last time. We were calling it Tariff Geddon, Tariff Palooza. We had some other. You guys came up with some other good names. And the first thing we started off with was "This too shall pass." And remember the other times that something like this has happened. Of course, we pointed to COVID back in 2020. We went to the real estate big meltdown and a bunch of little meltdowns in between. If we see here, here is the big COVID move, and that passed very quickly. If we pull this thing out and go to 2008, same thing. It took a little longer to develop, but eventually it did pass. And I've traded through all of these markets here. The internet boom and bust, which busted here starting in 2001 and bottomed in 2003. So this was, again, a longer one, but eventually it did pass. And then a lot of mini ones along the way that don't look so bad, but they're scary when you're in them. 2015, 2018, 19, even more recently, 2023, when there were some really big inflation fears, which we've still been dealing with. So we said that, and as we said that, that was almost the low. If we look at what happened after our last meeting, we had one more gap down, and that was essentially it. So remember, when we get through these things, don't listen to the doomsdayers. Just watch what's happening. Take a calm approach and watch what's happening in the market here. And we talked about this as this was happening. I don't know if we said it on the stocks and coffee, but as this gap down happened on Monday and Tuesday here, we were talking about this in the swing report, that this feels like capitulation volume. And we had this arrow drawn here. And oftentimes, when you are at extended levels, you get all this scary news that often is the last of the selling, at least for a while. A bounce is in play, and that's exactly what happened. So if we kind of just review the market and where we are here, and this has all been essentially related to two things. You could maybe talk about some of the wars a little bit, but not really. It's really been related to two things that relate to each other. That is tariffs and inflation. And all of our little, gap downs, gaps ups, they've all been related essentially to that. You can see here, I'm forgetting now, there's been so much news through these days. I'm forgetting what happened on exactly happened on each of these days. If I'm remembering correctly, I think this is the day where Trump said, okay, we're lifting the tariffs to only 10% on the rest of the world, and it's just China at 150%. I think that was this day. And you see the big reaction the market had. And then some back and forth around the 9 EMA. And then the news has been getting slightly better, and the market is liking what we're seeing. So overall, exactly what we want to see. And when you get through one of these downtrends, what you want to see is first, of course, the reflex bounce, which we saw. But remember, we have a plan A and a plan B. I think we talked about this during the and I did I get rid of it? Oh, here. Yeah, see, we had plan A, plan B here. And essentially, when you get that bounce, you're looking at where bounce doesn't predict, you're right back on trend, all systems are go. It's essentially now you're trying to assess from that bounce, is this a dead cat bounce? And what a dead cat bounce is think of, I think this got named for, when a cat falls out of a tree, it doesn't splat, they bounce off the ground, a little bounce, and then they come down. And that's kind of the idea here, that we get that bounce, and then you get that secondary move down. This would be a dead cat bounce right here. When you saw the big flush, you saw the reflex kind of bounce to the 200-day moving average, and that failed, and then you had the secondary move down. So the question was this a dead cat bounce, or is this bounce leading to something more sustainable? We've said through this whole thing, you don't really know because we can't predict the news, right? We don't know what is going to be said about tariffs, what's going to happen with Powell. This big gap down here was when Trump really went aggressively against Powell, because that, the market gets a little worried about that, because then the system is involved in the sense that if Powell came out and said something contrary to what Trump wants to hear, is Trump going to try to fire him? And that could create uncertainty in just the overall system, right? So the market gap down big on that. Then Trump back one of these days, I think it was this gap up here, Trump backtracked and said Powell's job is not in any danger. And when he said that, the market liked that. Okay. And they don't really, oftentimes they don't care about what the news is. They just want to make sure there's certainty and they know what to trade against. And that happened there. And then the market has liked what it's heard since. And then maybe a little softening with China and the US and potentially some negotiation. So the market likes all that. So that's where we are right now. So that's kind of a quick recap of all the news that happened throughout here and where we are right now. Now, as this has been developing, we basically said there's a lot of uncertainty. Again, we can't predict what the news is going to be, but just going from our technicals and what we were seeing, we were saying, be cautious, but we can take some slightly bullish shots that this felt like capitulation. Market internals were actually improving some, and we'll talk about that in a second here. And that led us to be cautious, but trade through it to the long side. I think we had one hedge in here. Outside of that, it was all long trades throughout this whole period. And that has been our approach and what we're watching for now. And when you see these big dips and then the dead cat bounce, you want to see each resistance level you're facing clear. So first, you have the big gap down. And again, if you guys have any questions, as usual, guys, you can post them in the chat here or any commentary. Brian's talking about the Zweig breath thrust on April 23rd. I don't follow that. but a lot of these indicators might be saying the same thing. Um, so what we want to see here is first, does the first resistance get cleared? And as that resistance gets cleared, you want to see the broader market. So that's our resistance levels. Then market breadth. Is the broader market following what the indexes are telling us? And then we're going to look for it, the next resistance level. So if we look at SPY, it cleared the first resistance level. Took a little time. There was some back and forth, but it cleared that 9 EMA, and we like that. And what we're going to talk about in a second is as it's cleared the 9 EMA, market breadth has really improved, and we're seeing it's not just the indexes and some of the heavier weighted stocks. It's a market move, and what's really good is we're seeing speculative and momentum areas moving with the market and even leading the market. So that's good. And on Friday, we essentially broke barely the second resistance level. So the first was the 9 EMA. The second was this range that had developed here. And we could take the top of the range on this day. And you can see on Friday, we closed above that level. Barely, but technically that's a close over. So we hit the first level, the second level. Now the third level is the open gap here. That's going to become important. And right around that level is also the 50-day moving average. They're converging. So we have open gap and 50-day moving average right at the same spot. This is really key here. So this 50 and 200, which are very close, a range of about 4 or 5 points here. That's going to be the key. And if we get back above that level, it's pretty much all systems go. We are just back on trend, right? If we get over that level. So that's what we want to see here going forward over the next 2 weeks. That's what we're looking at. Really interesting too that we have the meat of earnings getting going now while this is happening. So if we see some good earnings, which we've seen some decent earnings, so that could impact what the market does as well. So I would key in on essentially 3 things right now. One is earnings. 2 is continue to just pay attention to the headlines related to tariff news. And some of us will get in there and try to parse the news and predict things. Do not do that. What you want to see, okay, this is the headline, and then I'm not making any predictions. I'm not putting my politics into it or anything like that. Just this is the headline. This is the price action related to that headline. And we want to see how the market is reacting to that news. So essentially, it's earnings, tariffs, and Fed inflation. What do they do with what do they come out and say anything related to interest rates? Powell came out last week and continued to say wait and see approach. We're going to wait and see. And I think the market kind of actually liked that because he didn't come out and say, I'm really concerned. We need to pause. We might even raise rates. He didn't say anything like that. It was just what he's been saying, wait and see. So that's essentially where we are with our market analysis. So we had the capitulation volume here, clearance of the first resistance level. I haven't talked much about market breadth. Let me hit that in a second. And then Trump backtracking late last week. He basically, he went very aggressively against Powell. Then he kind of pulled back and said, Powell's job is not in danger. Market like that. And then, of course, he's lightened the load on tariffs with China, still tariffs, but he's talked more about negotiating and also lowered those, 140% numbers that he had. I forgot what he's down to now. But the softening, the market likes that. And that's why we are where we are right now. And then improved market breadth. So let's look here. Most of you guys know the drill. Those of you are new or don't know this, SPY is not equally weighted. 500 of the biggest and best stocks. We can see them all right here. But Apple is worth more than DLR. It's worth more than FSL. It's worth more than MRK and so on. So Apple and Tesla combined make up, I think, around 4% or 5%. I think 5% of the S&P 500 now. The top 10 holdings, think of the Googles, the Netflixes, the Amazons, and so on, NVIDIA. The top 10 holdings in the S&P 500 make up about 35% of the S&P 500. So heavily weighted towards the top 10 stocks. So that doesn't give us, it's good to look at, but it doesn't give us the broader market, right? So RSP equally weights all of them, 0.2% equaling 100%, all 500. So Apple is not worth any more than any of these stocks in here. And that gives us a better idea of how the entire index is moving. So if we pull up RSP now look at what SPY is doing. And then if we pull up RSP, notice here, way back here before this decline happened, it was really lagging. Now watch here. If we look at SPY again, if we look at SPY, SPY was at an all-time high in February. Notice RSP showed a negative divergence. It did not make an all-time high. That was a signal. We were talking about this when it happened, and we got really cautious before this meltdown even happened. Because we could see here, SPY had broke this high here and was up here. RSP was down here. And in these market cycles, that's usually what happens. The more speculative, the weaker stuff starts to fall first, then the big guys start to fall. And that's exactly what happened here. Now we're seeing RSP take a little bit of a lead. It's slight, but at least we know RSP is on pace with SPY or even beating it a little bit. So that's a good signal, a positive divergence here. It was a negative divergence here. We're seeing a positive divergence here. That's telling us this is broad-based, at least for the biggest 500 stocks, it's broad-based. We can do the same thing with the Qs, and the Qs is more heavily weighted to the Mag 7, and then we can compare that to QQEW, which is the equally weighted for those 100, and again, leading a little bit. And I also look at IWM, and how's IWM doing? This is more small and mid caps. And you can see here, overall, it's down more because it got beaten down so hard. And notice here, back in February, again, was not making highs like SPY was showing a negative divergence, and now has been showing strength. We can also look at some of our speculative ETFs. ARK is one I like to look at. Look at that, already doing better than S&P 500. It's already at its 50 and 200, where SPY is below those levels. So this is a signal that speculative areas are doing well. Here's ARTI, which is AI, doing a little better than SPY. And we can go through some of these more speculative ETFs, and we'll notice here's IPO already at its 50-day moving average as well. When speculation starts moving, that's an indication, okay, this is a broad-based move. I'd be concerned if there were negative divergences now, where if SPY we saw improving, the Qs we saw improving, but these guys were still lagging, then we'd say, okay, maybe the market's not as strong as it looks, and a dead cat bounce is in play. But for now, we are bullish right here. That being said, we know the market is very sensitive to these news events. If Powell comes out and says something market doesn't like, the market will gap down. If Trump comes out and says something very aggressively related to tariffs, the market is probably going to gap down. So that's where we are right now. But I think we should be taking a bullish. We were slightly bullish before. My outlook has moved from slightly bullish to just regular bullish. Not still aggressively bullish, but we'll just say regular, just bullish. And we can be taking longs back and forth, and we don't need to short too much right now. So that's where we are in terms of the overall market. Now, the market is very correlated. When the market is in these volatile environments, what tends to happen is everything's moving together. And that's basically what's happened over the last month. Some maybe leading a little more, some lagging some. But generally what we see on a big down day, 95% of stocks are down as well. On a big up day, 95% of stocks are up on those days. We see a bunch of green or a bunch of red. If you look at your watch list, that's basically what we're seeing. On certain days, we see a bunch of red, certain days, a bunch of green. Now that the market's improving and we're getting less volatility, look how much tighter the candles are than before. We're seeing less of that, and we're seeing some leaders emerge. And there is a key setup that we have been trading through this as we started to get slightly bullish that has worked very well. And that is looking at these relative strength stocks, the stocks, and you guys who are report members know the drill on this. We've essentially been looking at stocks that through this run here in 2024 to early 2025 were momentum stocks in nice momentum trends, were leading the market before the pullback. And as they were leading the market, they were leading for a reason. They weren't just sympathy plays. And what I mean by sympathy play is, like, let's say a stock is in the cloud industry. And, the leaders in cloud obviously are moving very strong. And the companies that are not quite as good, maybe they have less revenues, less earnings, just not as good quality companies, they were putting in very similar patterns through this because just, it's that whole, the high tide lifts all boats, right? That they're all moving well because of the leaders doing well. So they're all moving well. We wanted to avoid those and focus on the true leaders in those industries Then when the market pulled back, assess either was the pullback lighter than the rest of the market, or if it did pull back strong and deep, did it recover very quickly? And those are the stocks that have done very well coming out of this, and they're kind of the new either continuing momentum stocks. While some of them have still kind of fallen by the wayside, they're just kind of languishing here. Some of them are leading, and the ones we like here that fit basically what I drew there, which is a kind of big continuation pattern and relative strength through the decline. PLTR, Hood, SFM, Roblox, App, CrowdStrike, Shopify, Spotify. We could list a few more here. I've got 5 or 6 others that I'm watching. These are the ones we've been focused on. I haven't been making a big list of 100 stocks to be watching. It's essentially these 15 or 20 stocks that we've really been keyed in on. These 4 here we've been trading back and forth and done very well with. So again, key stock setup, momentum. They're mostly mid-cap tech and specialty retail. And what I mean by specialty retail is like apparel stores that you see in a mall, or clothing providers that provide clothes to those types of stores. And we've got a big list here that we track, and those have been improving a lot as well here. A big list of these types of stocks as well. So that's what we've been essentially focused on right now. And we can look at some of these charts here. You can see PLTR. We actually already hit our target on this one, but we're going to hold. It's been so strong. We're going for the top of the range now. Here's App, Roblox. Now notice App bounced off the 200-day moving average. And this is pretty much exactly what I drew here, right? Momentum trend, the deep pullback, tested moving averages, and now has come back strong. You can see Roblox, App, nice bounce off the 200-day moving average, about to test the 50-day moving average. Here's Roblox already above the 50-day moving average. We're in this one as well. We already took profits in SFM, but this was an extreme kind of relative strength leader through all this, and broke the 50-day moving average before most stocks did. And you can see again, fits the parameters we were talking about here. What other stocks did I have on my list? Shopify here, Spotify as well, already not only above the 50-day moving average, but about to test its all-time high. So all of these are essentially putting in versions of the same pattern. Here's Hood. We are in this one as well, and it just went above the 50-day moving average 2 days ago. So you see a similar pattern, similar type of stock that we're looking to trade right now. If it's a messy pattern, if it doesn't really fit this pattern, I'm not even considering it much right now, unless it's had earnings, and we'll talk about earnings in a second here. So we have this basic setup that we're looking at, and I'm pretty much throwing everything else out the window for now. These are the stocks I'm focused on, and a few more that are putting in the same exact patterns. A couple of key industries. All industries are starting to move right now, but 2 that I really want to pay attention to, because they were really lagging coming into this decline. Even before the decline, they were lagging, and now coming out of this decline, if this truly is going to be the end of the decline and a continuation pattern, small banks and semis. Let's start with small banks. If we look at XLF, this is more weighted towards big banks, the Goldman Sachs, the Citibank, the Wells Fargos, and so on. You can see here it has been showing relative strength. And if we look at the small banks ETF, which is KRE, or regional banks, notice here it has been lagging. And especially during the dip, it dipped much more than XLF did. So there was this kind of flight to safety towards the big banks, the Goldman Sachs, the Wells Fargo, Bank of America, and so on. But there has been right here a very strong bounce in regional banks. And we talk about this when we assess earnings. Obviously, we're looking at earnings breakouts for trades to take, but it's also good to signal some industry analysis to us. And we noticed last week, a lot of the regional banks had very good earnings and had earnings breakout. You can see cash. I've never even traded this stock or seen it before. But notice here, the big breakout. I have 3 or 4 more regional banks on here. Here's NPB, another one I've never traded. This is a recent IPO. It gapped up on earnings as well. And then here's SYBT, also big move on earnings. I only have 3 listed in here. There were 3 or 4 more that also had good reactions to earnings. And that's kind of a clue to us now that, all right, maybe we should be paying attention to the regional banks, not just the big banks. And then semiconductors, which you can see here, going back to February, was lagging the market. You can see here, and it had been a huge leader, through 2022, bottom 2023, 2024. But then in February, you can see here when the market was making high, it was not. And again, that negative divergence. But you can see how strong it has been on the bounce. And I think do I have any semiconductors in here? I don't know if I put them in here because I don't necessarily want to trade them. But there were 3 or 4 semiconductor stocks. I think Lam Research, um, Texas Instruments. I might have I don't have that in here. And there was another one. All of them, basically all of the semiconductor stocks that I've seen, have either had good earnings and not done a whole lot, or had good earnings and broke out big. So, and it's being reflected in the index here, ETF here, and you can see how strong it has been. So 2 areas I would start watching that I was actually ignoring for a little bit. That's semiconductors and small banks. All right, now let's look at big tech. And again, guys, if you have any questions, you can post them in the chat here, and we'll try to get to a few of them. Looks like you guys don't have a ton of questions today. But lastly here, let's look at Tesla, Netflix, and Google. They all had earnings. So of the Mag 7, 3 of them have had earnings so far. Netflix has been the relative strength leader throughout the pullback, before the pullback, all the way through. And we love Netflix here, and we're looking for a good spot to enter now. It was interesting. We talked about the market being very correlated, where on the days it's down big, everything is down. When the days it's up, everything is up. And Netflix's earnings came out on the day, or its reaction to earnings came out the day the market was gapping down, when Trump went after Powell. I think that was the day. So you can see here that the market dipped, and Netflix had blowout earnings after hours. When it reported, it was up like 6 or 7%. They blew out estimates on revenues, on earnings. The subscriber growth was more than expected. And what was really key, we always talk about guidance, not just the numbers, because the numbers are the past. What are they saying about the future? And we expected a lot of companies to warn about the future. Netflix basically said, we are tariff proof. We're recession proof. We're inflation proof. Everyone's going to get Netflix no matter what. And the market loved that. So even though it wasn't a huge earnings breakout, it was only up 2% on that day. The fact that the market was down big was a good signal. It actually had its real reaction the day after, and you can see when it broke highs here. And this is where it is right now. We're watching Netflix very closely for one of 2 things. One, does it pull back and hold the old high? Then we would enter here. Or does it pull back deeper to the 9 EMA, maybe fail a little bit here, pull back to the 9 and show some strength here, or this range even here? So it's hard to guess right now to predict that, but we're going to be watching it and see what price action does. Those of you who don't like to trade 1,000 stocks, there's nothing wrong with taking only 10 shares or 5 shares of this, because when Netflix moves, it moves hundreds of points. So even if you have 10 shares, that's a lot of money if it moves up 100 points. But if you like trading the lower priced, you can use NFXL, which is these big 7 stocks now. I think all of them have their own ETFs, and you can see NFXL. It's double leveraged, so Netflix was up 4%. You can see NFXL. This is weird. This can't be right. This shouldn't have played out like this. Oh, sorry, not 4%. It was up 0.42%. So NFXL should be up around double of that, which is 0.77%. So almost double that. Netflix is up 3%. NFXL should be up like 6%. And it's a $50 stock right now. So if you don't want to trade Netflix, you can trade NFXL. Just know you're getting double the volatility. That's great on the upside, but it also impacts you on the downside. So I like Netflix. 2 stocks that I haven't liked. They've actually been showing relative weakness, but now are very interesting. One is Tesla. Tesla's interesting because Tesla, you can see right here where Tesla had their earnings. Tesla had horrible her earnings, historically horrible. Their revenues in 1 year decreased 70%. That's downright scary, right? But look what happened to Tesla. Tesla was up 3 or 4% after horrible earnings. And that makes me really interested in the stock when I see something that has horrible earnings, yet the stock is not doing what it's supposed to do. If I heard those numbers that their revenues were down 70% from the year before, um, I would expect a huge gap down, and that's not what happened. So that interests me. Whenever something happens that you don't expect, I always get interested in that. We know also in their guidance they talked about the fact that they are uh, on their way to rolling out cheaper priced cars. So I think maybe the market likes that. They're not looking at the past and the 70% decline. They're looking at the future and saying, okay, they have these cheaper cars. They're going to create revenue. So that's good. So I think the market like that. And then also Elon saying he's going to focus less on Doge and more on Tesla. The market obviously likes that as well. So maybe that's why it's gone up here. But this is a very strong signal when you have bad earnings, but the market is the stock does very well. You should be paying attention to that stock. So I'm waiting for it now to see if it gets up over the 200-day moving average. We could have an entry here above 300. And then finally, Google. Google has been lagging as well. I think a lot of it is related to potential for a breakup of the company. But you can see here post earnings, and you can see how it had been lagging. Just remember what Netflix looked out like, and look at what Google has looked like in that same period of time. But Google had blowout earnings in terms of revenues estimates. Almost every segment of the company was doing well. Sometimes, there might be it's doing well in advertising, maybe not so well in cloud, and so on. It was doing well across the board. So very strong move here, coming into a lot of resistance here. You can see where we've circled here. So I want to see it get up above the moving averages, but we will be paying attention to Google very closely. And then, of course, now we've got the rest of the big techs to start reporting. All right, that's what I wanted to go over today. So remember, guys, our market analysis, we're getting more bullish. That could change very quickly if news events come out or price action changes. But for now, market breadth really strong. We're taking out resistance levels. Everything looks good. There's a key setup we are watching and a type of stock that we have been trading. Some new industries to pay attention to that we haven't been paying attention to recently. And then earnings and Tesla, Netflix, and Google. All right, you guys know 14-day free trial, Bulls on Wall Street, if you want to check out that. A couple of posts. I think a lot of you have looked at it already. In March, while this was happening here, we started to compare the 2022 bear market top, and we've talked about this in the last Stocks and Coffee as well, which is right here. And we were looking very similar to that. And the question was, which way does the market go? Does it get back on trend, or does it break through? So far, we're in the range where we still can't make a decision. If we look at SPY here on which one is playing out, it still looks exactly like, even with the market bounce we have, the market bounced here before the next move down. So we're still kind of mirroring exactly what happened in 2022. But so you could say, oh, then, okay, this is a bear market top. But we are also mirroring spots where we look topish, but then we went on continuation pattern. And the market is littered with those where we don't see the bear market, but we saw the development of potential bear market, but then it went in continuation pattern. And that's where we are right now. So this article here, if you want to check it out, is still very pertinent in that our analysis is still the same, even though all this has happened. It's because we're still putting in that two variations of patterns. One is potential bear market top, two is potential continuation pattern. So you can just go to pauljsingh.com and it's like the second, you can have the whole link here, but just go to pauljsingh.com and you'll see it. And then on Bulls on Wall Street, there's a good article, 50 swing trading tips every trader needs to know. Just a lot of good tips in here on trading. So check that out as well. And you can go to bullsonwallstreet.com. Here's the exact link, post swing-trading-tips, or just go to Bulls on Wall Street and go to the blog, and it's in there. All right, let's see if you guys have any questions. Doesn't look like we have a ton of questions today, but let's take a look. Tesla surged 10% even with, Rahul, you were talking about what I was just talking about here. Yeah, And so more sentiment now. Yeah, like I said, I do like Tesla, which is interesting because normally I don't like a stock with those kind of actual earnings. Dennis, good question. Are you back to normal swing position sizes? We've been trading bullishly. I have been trading. Position sizing has been normal. My risk has been less in that I've been going under 1% on the risk. I still think it's a time for a little bit of safety and maybe still position size, or either position size or calculate your risk a little smaller than normal. And I would probably do that until we get over these ranges. So I would say don't be afraid to trade, your bullish setups, but maybe still slightly smaller than normal. Good question. Uh, Richard's asking, does guidance always come at time of earnings or within that week? Yeah, so they release earnings and then they talk to their investors, and then that's when it's basically their guidance we're getting from their discussion, and they might have a write up on it too. Of course, they might say things at other times, but on earnings day, there's three things you want to pay attention to. That is what their expectations on earnings and revenues are. Do they beat those expectations? And sometimes revenues and earnings can be great, and they're actually growing. They just didn't beat expectation, and then the stock could gap down. So those two things, and then guidance. What are they actually saying? And sometimes you'll see the market reacts much more to what they say than the actual numbers. And then, of course, the price action related to all these things. All right, guys, that looks like the extent of your questions. We'll do another one of these maybe in a week or two. So keep a lookout either in your email. We post it also in the Discord, and I usually post on X as well. So keep a lookout. Stocks and Coffee. If you're not on our email list, get on it, and then you'll know when I'm doing these. And again, check out those two articles just because I think they're really pertinent right now, especially this bear market top one on Paul J. Singh. And then on Bulls on Wall Street, this 50 tips one is just a lot of good tips related to swing trading. If you're a trader, there's probably something in here that'll help you. All right, guys, have a great weekend, and I'll talk to you soon.